Alright, let us start with some technical setups first, and then we'll go back and take a look at the news. Unemployment claims, the only red folder today, came out better than the previous, just a little bit lower than the forecast. So we did get a nice push up based off of the weekly time frame, still sitting into these previous support areas. Still in that bullish structure, we got a nice corrective move from up top there, coming back into a liquidity pool. And the reason why we know that is a liquidity pool is because when price has tapped into it previously, we've had deeper corrective moves. And then after a little bit of consolidation, a bit of a retest, that's where we got the momentum to come back and create those new all-time highs. And that's the same exact area that we're tapping into at the moment. So that is our 45,300. This week we have already created a top wick rejection, which is a previous rejection right here as well, coming into 46,800. Drop down to the daily. Last two daily candles have closed weak bullish, which tells me that the bullish momentum is starting to die down here, but we are still creating some massive wick rejections on the lower time frames. Those are going to set up as potential liquidity grabs or liquidity generation. So based off of the daily time frame, what I'm going to do is map out a zone here. This is the level that we're sitting at, previous resistance before a bit of a pullback, and then resistance right here for this consolidation on the daily time frame before that push that we got on a Monday, and then break and retest and push back up. And then again here we have this resistance formation, break and retest, and then a push back up again, bullish. And then here, that's kind of the area that we're struggling into at the moment with the last couple of daily candles. Drop back down to the 4 hour. So we just came back down, got a big rejection down here. So as long as we're above this, we're going to continue to look for those buy opportunities to the upside. Drop back down to the 1 hour. This new 1 hour candle just started forming. We're going to give it a couple of more minutes to see if it can break past this consolidation. If it can, then we're targeting that 46,750 up to 46,800 level for any buys. If we get stuck in this consolidation like yesterday, then no trade day. For sells, price needs to break below the zone and then come right back down into this previous support. So this move, just like yesterday, we had just a ton of consolidation, pretty much all of London, even New York. And then we start to break below this going into Asian session and even pre-London session. And then we got that push up right here with the unemployment claims data that came out. Plus, there was news about Iran formally replying back to the US truce proposal. So nothing in between here. I'm going to set my alert right above the zone and then set an alert right below the zone for any sells. Let's go over to gold and then we will come back to the currencies. Alright, based off the weekly time frame, massive run up, pull back down, big rejection right into this level, into almost that 4,000 level this week already. So we're going to map that out at 4,100. Top wick rejection. So we have a really big range this week that we can still trade into. And then that's 4,600. Drop down to the daily. A couple of days ago, this daily candle came down here, rejected on a Monday, pulled back, and then yesterday we had a rejection right into 4,600. This current daily candle seems to be holding on to a resistance. What I'm going to do is map out the support here first, which is the current daily candle's bottom wick rejection. If we break below that, then we're headed down to 4,300 and then a continuation down into 4,100. If price holds onto this area as support, then we're kind of just going to range in this area, which is going to be a zone-to-zone trade. So based off the lower time frames, it's just going to be wait for support formation right into the support zone right here, and then continue pushing, wait for the 4 hour to continue breaking its own high, and then those are going to be our buying opportunities to the upside. But based off of higher time frames, it seems like price is just creating those lower lows and lower high formations here. Come down to the hourly. So still sitting into that consolidation here. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100. 4,100 what I'm going to do is actually adjust this zone a little bit down here, because I don't want to be part of this consolidation here anyways. So I'm going to wait for price to break below that, or wait for price to break above this consolidation, and then look for those buys to the upside. Cool, that's going to be the setup. And then let's come over to USDJPY. Again, just watching this pair as we're getting closer to that 160 level. We are also going to be watching the dollar strength and JXY. And we're starting to see that the dollar strength is overall just sitting between that 100 and 99. If it drops closer to that 98, 97 level, then we're going to come back to a little bit of more normal, where we're going to expect a little bit more relief on the US dollar overall for any USD pairs, basically. Because as we zoom out, as we had talked about it a couple of live sessions ago, that even in previous times of uncertainty, we've had, for the most part, price just coming back and hanging around this area. So we got that massive push up that happened back in 2022, and the last push that we got, a similar push that we got, was in the early 2000s, late 1990s, closer to that level. After that, we've kind of just respected this area. Even back in like 2007, 2008, this was really the last push that we've had for the US dollar. And then same thing with 2020, COVID and all of that came back closer to the 100 and the 99 area. And right now, even with the war going on, all the geopolitical tensions, we're kind of sitting around here. But as we get a bit more of a relief, as we get closer to the 98, 97, 96, we can expect to see a little bit more relief when it comes to GBPUSD and EURUSD, and even USDJPY. And even based off of the weekly time frame, all of these pairs are sitting at a major level. So if you haven't already, please make sure that you watch that webinar that I'm reminding you guys of for the last couple of days. Let's come over to USDJPY. So we have that. The dollar strength obviously sitting in that 160 area, and then I also want to go over the yen. When we're looking at the yen is sitting at historical lows. So that right now is increasing the risk in the market of any potential Japan's authorities stepping in for the currency manipulation. Alright, so looking at USDJPY, we're kind of just sitting here, we're just watching this pair, so not so much of a trading opportunity here just yet. We're still going to wait for price to either break above that 160 level for any quick buy opportunities. I'm expecting a much bigger move if it breaks above that 160, but still a lot of more volatility in the market as that risk increases, or price rejects off that 160 and we get a bigger sell-off opportunity down here. Come over to GBPJPY. Alright, so we have on the weekly time frame still rejecting some of these previous highs into 213.3, drop down to the daily, a major previous resistance area right here, and that's kind of the area that we're hanging into the last couple of days, which is 212.5. On to the 4-hour time frame, just a ton of consolidation above this area, but still in a bit of a bullish structure. So if 4 hours in consolidation, then I know that the rest of the time frames are going to be a bit more messy as well. So what I'm going to wait for is swing trade opportunities on this pair, either above 213.5 or below 212.5. Another thing that we can wait for here is we're closer to the resistance zone here. If price can reject off of these areas here like it has previously, then we can look for sell opportunities to come back down for about 33 pip scalp and turn that into 56 pips or so. So it's a bit of a tighter range compared to the trades that we will get once price breaks out of here. For example, even based off of the 4-hour time frame, if price can break above this 213.5, then we're looking at a 50 pip just wick fill, and then continuation back for almost 90 pips into this previous resistance where we've seen those bigger sell-offs. And that's just at the bare minimum. For sells, if price can break below that 212.5 level, Then we're looking for sales to come back down for a wick fill for about 85 pips, and then come right back down into this 210 or 211 area for about 151 pips. So this overall, in terms of trade setups, is like a 50, 60 pip range depending on where your entry is. But once we break out of it, we have 100 pips on either side that we can catch. Alright, now we have breaks with some of these major pairs. So same thing, based off of the daily, we have this previous major resistance that price has just rejected off of. Next level that we care about is going to be the support that price is headed right back down into. Drop down to the 4-hour time frame, and we're pretty close to the support area right here. So if price bounces off of that, we're looking for a similar move, just some push back up. But if it continues breaking below that, then we're looking for sales to come back down at the break of previous 4-hour low, come down for about 43 pips at the bare minimum, and then you can extend that down if we continue to see the dollar strengthening or the euro weakening. Drop down to the 1-hour. Seems like we're holding on to a support here at the moment. For any quick scalp, again, you're just going to wait for the previous high here to be broken. Continue up, very small range of 17 pips, and then a continuation back if it just wants to do a zone-to-zone trade for about 57 pips. Similar situation to GBPJPY. Once price does break out of these levels that we have, then we have much bigger trades waiting on both ends. So if price breaks above that, we're looking for a minimum trade up for about 54 pips, and then clean price action to the upside for about 144 pips. And that's going to happen if the dollar weakens, if the dollar drops to that 98, 96 level from the 100 level that's sitting at right now. Same thing for any sell opportunities to the downside. Looking for about 64 pips, 50 to 60 pips depending on your entry. And then continuation down to the next major level of support, anywhere for about 180 pips down to around 250 pips. So we have much bigger trades that we can catch on either sides. Since it's a major pair, it moves a lot slower compared to the other pairs that we're looking at. So I like to use these as swing trade opportunities instead of scalping or day trading them. Looking at GBPUSD, wick rejections into the same exact area for the last almost entire month. And then same exact support down here as well. Zoom out. So we're sitting at key weekly support and resistance levels. If price breaks above this, then we're looking for those buys, swing buys to the upside for about 230 pips, 200 pips depending on your entry. For sells, we're looking for about 118, wick fill for about 205, and then if it drops lower than that, then we will be breaking out of this bullish structure, coming back down into around 1.253 area, which is a total of 128, 200, continuation down for a wick fill, coming back into this range for this resistance level right here for about 400 pips, and then a further continuation down for about 846 pips, and that is only going to happen if the dollar pushes above that 100 mark that we saw in DXY, or if the pound gets weak. Based off of the daily, sitting in a massive daily consolidation level. If you're looking for day trades, you're going to map out the current daily low. The daily candle is also kind of just like a wick right now, so there's no clear direction on the current daily candle. But if you're still looking for any day trade opportunities, you've got your daily support, you've got your 4-hour consolidation resistance, and then as price breaks above this, then looking for about 50 pips to the upside if there's going to be another wick rejection for about 91 pips. So you can look for your buys above that or sells below this zone right here. So those are all the pairs that we're looking at right now. Any questions on these? Or any other pair that you guys want to go over? We should also look at silver. Silver's going to do the same thing that gold does, just bit more volatility. So instead of marking the current weekly low, I'm going to mark off this level. It seems like we've had a massive rejection and then a pullback at this level. So I want to see what happens on lower time frames down here. 64 is fine, yeah. And then wick rejection into previous support, which is $73. Come down to the daily. We've got a nice push up. Yesterday we rejected and closed bearish, rejecting right into the previous support, respecting it as the new resistance. So we can potentially look for more sells coming right back down into 64 mark. Drop down to the 4 hour. Currently holding on to a 4 hour support. The current 4 hour candle has no bottom wick rejection, which tells me that it hasn't kicked out any sellers here just yet, and we are approaching another 4 hour consolidation zone right here. If price breaks above that, then we can look for those buying opportunities to the upside into the $73 mark. If price rejects this and then pushes right back down, then we're looking for sells right below the break of the previous 4 hour low into that 64 mark. So it's a very tight range in the middle, which is going to be our no trade zone. And then we have better opportunities as price continues to break above these previous levels. I just moved up the zone, so then we can also look at this bit of fake out levels, retracements, resistance, and then not be stuck in that. The same exact analysis for oil from a couple of weeks ago and also from the webinar. As long as we're above the 90 to 100 level, it's still going to start feeding into that inflation narrative that we have, which is still going to keep the Fed on just holding the rates path for a longer period of time. Right now the expectation is that we're not going to see a rate cut until June. If this holds out for a couple of more weeks or a couple of more months, then that expectation can push back further. So we have cut the expectations from 2 rate cuts in 2026 down to 1 already, and we might not get a rate cut this year if oil stays elevated closer to the 100 mark or even above 100 if we get another spike like that. Alright, we're going to stay on for another 5 minutes or so. You guys have your levels mapped out. We're pretty much just waiting. Let's see if gold can actually push and close above this level. But if you guys have any other pairs that you guys want to go over, or something didn't make sense and you want me to explain it again, let me know. We have about 5 more minutes. Let's see how gold closes on this 5-minute candle. Alright, we got a pullback on this 5-minute candle, got a couple of seconds. Very high chance that we do the same thing as yesterday, which is consolidation, and then later into the session or Asian session is where we get the move. So even yesterday we were just sitting in this consolidation, and then we got the move in pre-London session, just to consolidate out all of London, and then right now in New York as well. Alright, that's our 5-minute candle. Close below the zone. What I'm going to do now is adjust this alert to sit right above the previous 5-minute candle's top wick, which is a current 15 candles top wick. If we can break above that, then we have a clean move coming up to 45.20 level. Nothing on US30 here just yet either, or any of these other pairs. Alright, all good? Everything makes sense? Any questions?